Welcome to the Big Four Accounting Firms podcast brought to you by big4accountingfirms.com. Now, in the US, there's a Memorial Day break right now, but all the people at E&Y will have to return next week to huge rumors of them splitting up. And there's news all over the internet about this split up. Some are pretending it's already happening. Others are pretending it's not. But the official word from E&Y is that it's not happening just yet. There's no official word. But most likely it will happen in some respects. And I think this information leaked from multiple sources because there's information just in general for people close to the situation, whatever that means. And then there's also information from investment banks that were helping E&Y, because one of the scenarios of E&Y is they might IPO. But I don't want to talk about that in this episode. I want to talk about just them breaking up. And I read this article from the Australia Financial Review. And Australia Financial Review covers the Big Four really well because the Big Four accounting firms are some of the hugest employers in Australia, where in the United States, they're huge employers, but I feel like in the United States, the Big Four accounting firms aren't as respected as they are abroad. They're not just because I think journalists don't understand accounting and they don't want to write about it in the United States because it's not sexy either to write about accounting firms. It's not sexy even to write about consulting firms. But that's the situation we have here is we have an accounting/consulting firm looking to break up to become more consulting. And that's what Australia Financial Review really did a good job of writing up. And I think Australia Financial Review got to the heart of the issue. And I spoke about this in the previous podcast about why I thought that E&Y was breaking up. And I thought it was related to their tech audits, but I thought it was more from a perspective of they weren't making enough money from the tech audits. And what the Australia Financial Review is saying that the reason they might be doing this is because they can't partner with the tech companies like Amazon, Google, Salesforce, etc., because they audit a lot of those companies. And so they can't go into companies and partner with Amazon, let's say, because Amazon Web Services it offers 1 million services, and you want to take those as part of a complete revamp of an accounting department, even Workday. So they audit Workday as well. So like we see Workday consultancies, Amazon consultancies, and taking those into companies to help them do whatever back office stuff they need to do. But E&Y is limited on what they can do, apparently, extremely limited, or limited enough for them to want to break up. And Australia Financial Review, again, I'll give them a ton of credit, did a really good job because they talked about Accenture. And Accenture is this public consulting firm that broke off from I believe was Arthur Andersen or PwC. I forget the particulars. I think it was Arthur Andersen. It was the surviving arm of the consulting branch. And now they've grown into a huge consulting firm. And another thing the Australia Financial Review has talked about how the Big Four accounting firms have done this in the past. How they broke off after Enron and Sarbanes-Oxley, they broke off their consulting arms and they rebuild them. And I think even if they break up here, I think that's what will happen again, as I said in the previous podcast. But it appears that E&Y, if it's true that E&Y is looking at this situation because of limitations of auditing the tech companies, then I think they'll do it because those limitations aren't going away. They're not going to stop auditing the tech companies because it's pretty lucrative. Even if it's, I don't think it's lucrative as financial services. Financial services is the best audit you can get because it's easily over $10 million once you sign up a large financial service company. It doesn't even have to be that large. That's the other thing. Because there's so much regulation around financial services, there's not as much regulation around tech. And that's why tech audits aren't that big revenue for the accounting firms. And so E&Y, they're seeing these consulting firms just explode with all these services you're offering because technology has grown and everybody loves data and they love to mine the data to grow their sales, etc. And so E&Y feels restricted by that. And because of that, they're looking into options. They're looking into splitting off their audit firm. They're looking into potential IPO. So there's a lot of things that come off of this. This is a huge implication for EY, the people that work in EY, because what will you end up with at the end of the day? And what will you end up as an employee? How will pay be structured? Will it be the same old system? I think if you stay with the audit firm, it will be. But also another question that I would have is, how is EY audit firm independent going to interact with EY, the consulting firm? Because EY, the consulting firm, offers assistance to the EY audit team. And so there's a lot of tiny little implications here that can mess this thing up. And that's another thing that the article talked about that I think was correct, is that PwC and Deloitte and KPMG have looked into this in the past, and they just decided that it wasn't worth it. And I think that's why you see PwC do this new equation. This is a different way for them to get around this, because I think there's too many implications. It's hard to break off your audit firm without basically killing that audit firm. Not killing it, but it's going to stagnate a little bit with revenues. It potentially, if EY audit were to break off, I think they would need to go into other areas. They would need to go more into financial services than they currently are. They would need to go after other audits that they previously maybe weren't able to go after. But they just have to be a lot more ambitious than they currently are, because right now they're not that big as far as Big Four accounting firms. As far as in terms of revenue, because the Big Four accounting firms, each one makes, KPMG is the lowest, and they make $30 billion, and the EY audit firm I think is $13 billion. Would be $13 billion. So they would have to be more proactive in order for people's salaries to keep growing, in order for them not to stagnate. Because the thing with audit revenues is they're only going up by small single digits. So if you were to stay with the audit firm, you wouldn't be sharing in the revenues of the other practices. You would just be stuck with audit. But I think all those details are being worked out, and I think that's why this hasn't been announced yet, because they have to think through all this stuff, all the implications, all the regulatory implications, all the systems. The Big Four accounting firms have terrible systems for billing, customer follow-up, etc. So, and on top of that, you have to split that up all of a sudden. And I guess they might have a little bit more experience in this area because of what happened with Russia, but I doubt it. Because the Big Four accounting firms, since they're structured as a partnership, as multiple partnerships partnering together, they don't really learn from these things. Nobody really shares their knowledge across the firm. There are people that try to, the firm tries to, but even when you're on the intranet in a lot of these Big Four accounting firms, there's a different webpage for every country, for every region, etc. They don't share knowledge very well. So a split up of this size would be very confusing. Obviously, this happens all the time in other companies because companies merge, companies acquire. But that's the other thing too with firms that split up and merge. A lot of them, they don't reintegrate. They don't integrate well. They don't split up well. And issues that were there before persist for forever. So it's going to be interesting to see what happens. Things are happening really fast in the Big Four accounting firms. And it might be the Big Five accounting firms here pretty shortly. And we might just see a complete shakeup of the accounting industry. But again, if this happens, what I think will happen is that EY will have this separate audit firm, and that separate audit firm will build up a consulting firm. People will say, no, that's not what they want to do, but it's just part of business, that you're in there offering accounting services, and these people want your advice on other accounting issues of tax, of the systems behind accounting, of payroll, etc. They want all this from their accountant because the accountant should know all these issues. They don't necessarily, but they think accountants know everything about money, about finances, about tax, sales tax, indirect tax, cross-border payments, etc. And so they always ask their accountants. And if you're an audit partner and your client's asking you about this, then you want to offer them that service. And that's how the consulting practice gets built up. So I understand what E&Y is doing. In the short term, I think this really makes sense. But in the long term, I mean, nobody knows what's going to happen in the long term, but in the short term, it definitely makes sense because there's a lot of money out there in offering these consulting services. And I think that's why they're doing it. They see the public consulting firms and the revenues they're making and how they're exploding past the big four accounting firms. Because even the consulting firms are bigger than Deloitte at this point, or getting bigger than Deloitte. And so why would EY miss out on that? And EY could easily jump past PwC if they focus solely on consulting in a few years. But we'll see what happens. It's going to be a crazy week in the big four accounting firms, potentially big five accounting firms. So make sure to subscribe to this podcast to stay up to date and get future updates, and also check out the show notes for useful links. Thanks for listening.